Hey everybody, Brian Shannon from Alphatrends.net. Today's Friday, the 28th of March, and the end of the week, month, and quarter. And what a great quarter it's been. Let's look at these year-to-date numbers. S&P up 10%, semis up 28%. Bitcoin up 51, or Ethereum's up 51%, Bitcoin up 67%, just a monster rally, except for bonds, which are down. So let's take a look at the charts and make some sense of it. We remain in a primary uptrend. As you know, my mantra is while we're in an uptrend on the daily time frame, and we're riding this 20-day moving average just beautifully, while we're above that, we are innocent until proven guilty. We get cautious during periods where the market sells off suddenly like this, but then, the recoveries are more likely when the primary trend is higher. So I get cautious, but definitely not bearish. We're back above the 5-day moving average. We'd been talking about the anchor off of this peak. Let me just put that there, and somehow it disappeared. So let's color that red. That was the prior high. So we're back above all these key levels. Next week, I think your most important level to hold will be right around this 521 and a quarter level. If we continue to hold above that, then we're not in the risk of a greater pullback. And we do have a long weekend as well, so enjoy your extra day off. I know I'm going to. Innocent till proven guilty on the primary trend. Anyone who's trying to pick the top has been unsuccessful so far, as we did make a new all-time high today, and it looks like we may have closed at one. It doesn't matter to me whether we closed at an all-time high or not. I'm more interested in what's going on in my account, and that's the way it should be for you as well. The Nasdaq, not as strong, and a little bit of caution here, simply because we have a declining 5-day moving average, and we're trapped below it all day today. We're also trapped below the anchor off of the all-time high, which was made last week. Not a concern as far as, enough to turn me bearish, but as I said, we are cautious while we're below a declining 5-day moving average, and the primary trend is higher. The primary trend is where we give the most weight to what we're looking at in the market. We could draw a trend line if you wanted. It looks like that. The most important level has been this area right in here at about 433, and that's right now where we find the 50-day moving average as well. We'd also been looking at the anchor off of this low, so that might end up being important next week. Let's just put that back on there so we have a good reference point. I think, though, the key level, and it wouldn't be a bad thing to pull back down towards that 433 level. If we pull back down to there, it'll catch a lot of people off guard. And as I always remind people, it only ends badly if you don't have a plan in terms of where your stops are and that sort of thing. So any stocks you're concerned about or that you want to lock in your gains, just always know where your exit strategy is so you're not blindsided. I'm not suggesting you take your profits or anything other than what's right for you and your account. The Russell 2000, it didn't pan out exactly the way I wanted it to do in terms of the way I had outlined a rally last week, but we did get a nice rally in the market this week. We saw that this gap up, then we saw a terrible close on Tuesday, but yesterday we got back above it. And the thing that you always have to be aware of is getting back above the anchor after a gap. And does that provide you with a good entry point? So if you're involved in here, I think the key level that you want to continue to observe is underneath these higher lows right at that 20-day moving average. Backing it up to a weekly time frame, this market is doing what it's supposed to do, and it looks like it's likely headed for about that 215 level. That's where we have this prior big band of support. It doesn't mean it's going to, fall apart or, run into a brick wall in that area. This is a potential level of supply that could be released that might be strong enough to become resistance. It's not resistance. We'll know only after the fact if it was resistance or not. When we look back at the Nasdaq, we didn't see resistance at the prior high. When we look at the S&P 500, we didn't see resistance. We heard a lot of people talking about, hey, it's coming into resistance, but the resistance wasn't there. We only know after the fact whether a level of interest becomes that resistance. So the key in here is to honor your stops and know what they are and what your time frame is. Semiconductors just kind of spent the week going sideways to slightly lower here. Not really a concern of mine that they are slightly lower. A well-deserved rest is what I think you could sum this up as. But we're trading in a pretty tight range here on this daily time frame. in this area, right above the 20-day moving average. Below that, we have this level. We are below a declining 5-day moving average, so you want to keep an eye on the anchor off of this low. And if next week we see something like this, and this is just a potential scenario that might lead to some further profit taking, would be if it gets stuck underneath the 5-day moving average and then breaks down here. More aggressive traders might want to get short there with a stop above whatever this high is. But I personally just like to leave these alone. If it falls apart, let it fall apart. I'm not interested in shorting in an uptrend. So the primary trend remains higher. People who've tried to short before on weakness, they get stuffed quickly, and I'm not interested in getting stuffed like that. So really, on the semiconductors, we're more cautious than anything. The longer term trend is still very bullish. You can't look at that and say that you see something bearish happening. The biotechs, they are starting to do a little bit of what I want them to do. Now, the 20-day moving average is still declining. This dashed vertical line is where we were 20 days ago. So that tells me that next week, as we get rid of this data in the 20-day moving average calculation, that 20-day moving average is going to continue to decline, as I had drawn in here last week. And so far, I was looking for ideally a little shakeout below this low. Today provided an excellent entry. It pulled right back. So here's our weekly chart. Prior resistance holding as support for now. This morning we pulled back right to yesterday's anchor, and then as it got back above the daily VWAP, that's where your entry goes with a stop below the low of the day. I took profits in here on partial, more than half of it actually, because I still think it's a little bit early here on the daily, on the 30-minute time frame. Next week, I'd love to see the biotechs kind of pull back into here, rebuild a little bit, and then get going, maybe even towards the end of the week, which will give that 20-day moving average the opportunity to flatten out. So so far I'm trading these biotechs, but doing so very aggressively, not looking for them to make their big move yet. Financial stocks, they just last week we spoke about how they were breaking to the new all-time high there, and we're going to talk about Bitcoin and Ethereum in a moment. But they broke to that new all-time high. We saw a little bit of profit taking briefly, but you just can't fight an uptrend just because we're breaking out to a new all-time high, and that that I don't think that breakouts are a good purchase place. Doesn't mean it's a short either. We're back above the anchor from that high, and we got back above yesterday, became a little bit more neutral. Today, buyers back in control once again. If I was someone who's a swing trader or investor in this, I would be raising my stops up underneath these higher lows on the intermediate term time frame. Let's take a look at the energy names, because they have now broken out to an all-time high as well on a closing basis. I'm not sure they hit this high right here. That high was 94.71. Today's high was 94.58. So not an all-time high, but a closing high. And that's what matters if you hold them in your account. This is what I've been outlining, is that I thought maybe we would see a little bit of a rally, then perhaps a pullback. So just be on the alert for that. I was positive and calling these a buy over in here. Now that we're breaking out, this is time to probably be taking a little bit of your profits off if you're long these energy names. As I mention all the time, I don't trade energy names. Let's talk about Bitcoin first. Bitcoin, if you saw my tweets over the weekend that I had pointed out that they were ready to go. I had purchased at 65 and change. Let's take a look here. Let me get that drawing tool. I had purchased right in this area right here, 65 and change. And I sold a third of it up in this area. It made a nice pullback. We're above a rising 5-day moving average. Bitcoin continues to behave real well. I think if you're involved and if you're concerned about where your stop goes, if you're looking at this emerging uptrend, then this creates a nice higher low right here in the biotech underneath this past week's low. On the weekly time frame above, we're back into those all-time high territories after a bout of profit taking, and it looks to me like Bitcoin is likely to continue up, who knows, maybe towards that $100,000 level. I don't have a price target, but it sure seems like there might be a big magnet up there pulling it in that direction. Ethereum, weekly chart on top, daily on the bottom left, and a 4-hour on the right is starting to look like it's ready to move once again too. We got above that anchor from the high. It's dipped a little bit, tested the 5-day moving average, and I think that Ethereum, you get this one going back up above these recent highs in particular, then you're stop with a stop under here. I think that Ethereum could be a good one, maybe even to outperform over the next 3 days over the long weekend. So that's going to do it. Just a wrap up of the markets. No individual stocks today. Have a good weekend and enjoy the extra day off. Thanks.